We have seen so many efforts by Beijing to boost sentiment, to boost confidence, and yet we continue to see the exodus. How bad is it?
On a net basis, we're seeing foreign investors pull their bets from Chinese equities at a record pace, and this is translating very clearly into emerging market ETF flows. I follow something like ticker EEM, which is a broad-based, very popular emerging market strategy. It's a passive vehicle, so it's hugging its benchmark very closely, and it's also on track to see its worst month of redemptions in about a year. And that's because if we drill down and look at its holdings very closely, because it's a market cap weighted fund, it's going to have a super hefty exposure to China. We're talking about a 25 to 30% exposure to Chinese equities, which is just a number that some investors can't stomach right now.
It's a tough environment, right? China's economic slump, the spike in treasury yields, bonds kind of back in the driving seat, if you will. There is this search for alternative funding with dollar bond sales sinking.
Yes, so we're really seeing emerging markets across the board reduce their dollar dependence. You mentioned these bond sales. Sale of dollar bonds for EM have sunk to the lowest since 2021 when we look at a monthly basis. So now for August, we're only seeing about $1.4 billion that has been raised by emerging nations in August. And that's compared with about $4.5 billion from August of last year. And so these EM countries feel sort of very pressured to get creative and search for alternative funding routes. We're talking about things like loan syndication, conservation, or nature-linked securities, and even beefing up their local currency bond market.